Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend, all. Ira Epstein with your weekend version of your financial market update for this Friday, December 29th, 2017. Before I go anywhere, I want to wish all a happy and prosperous 2018. I appreciate you watching me. Please tell your friends about it as the year goes on. And remember, my charting course at the end of this, if you want to take a purchase of it, give yourself a gift, you get a big discount. That discount goes away January 2nd. Over, probably the 1st, to be honest with you, and that's it. So the course will go from $79.95 to $129.95, and it teaches you what I do here. Now, would you think you'd have double-digit gains in stock indices this year if you had listened to all the press during the year? The president's going to undermine this. We're going to do that. Tax bill will never get passed. Obamacare, now that they can't win anything. And yet here we are with a powerhouse market that had a 29% return in the NASDAQ, 20% in the S&P. I just got off the floor 20 minutes ago before recording, so I was with Rick Santelli of CNBC. And I asked Rick, what was he thinking for 2018? He's still very, very bullish. I asked why. He said, the world's operating on all cylinders. There isn't enough American stock to satisfy everybody with our corporations, and the money chases the money. Okay, I don't know if he'll be right or wrong, but that was another pro's opinion of the market. I think, and how I started the conversation with Rick, I said, you know, Rick, it's going to be pretty hard to duplicate these gains next year. And he said, that's what you think. Maybe you can do it. We both agree in looking forward to world economies being good. I see the dollar under pressure. I am not of the school of thought of so many people. I think the dollar could have problems this year, and I say that because the market's already built in 2 or 3 rate cut hikes for 2018, and we're not rallying against the other markets. There could be better opportunities, Mideast, there could be Europe opportunities. In other words, growth, and you've got to look where you're at in a cycle. That does not mean this bull market has to be old. Some people don't realize that you can go back in history and find bull markets that are 17 years old. Yeah. And I'm not talking far ago. I'm talking 60s, things of that nature. So I would call the market maybe middle-aged, but it can go on a bit. When we take a look at something here that I have not seen in God knows how long, you did it before, though. Back from 2013, you stayed over the 18-month moving average. You then corrected going into the election cycle, if you think about it. You came out of that with President Trump, and this is his victory lap. Any way you want to cut it, this president did not derail the market. I don't know that what he did made it all happen, but for 2018, it's on him. He certainly has lowered the regulation. We're going to see interest rates in theory go up, but world economies are firing, and that is the good news. And here you end up with a market that is still running to the upside. When you come to the weekly chart of just closes, look at how strong. And yeah, for this week, we're down a little. So what? I mentioned to you even last week, I said, all the TVs want to be able to ring the banners and say, we ended up at new all-time highs. Doesn't matter. You've got these fabulous gains for the year. What manager isn't going to lock something in going into 2018 and then start again? His book's going to look good if he's ahead on the market, anything near what these markets have performed. And that's what he uses to attract a following. When you take a look at the weekly bar chart, you can see how you've come up, and now you're starting to step back a little bit on this. You still are nowhere near the last break low on the swing line. What swing line's doing, this is a chart without a swing line, this is it with it. The swing line looks at the bar before it, the prior bar, and decides should it draw a line to the top of the current bar or to the bottom. It's all very systematic. You don't get to choose, it does it. I teach you in my charting course how to do it. From here, in order to break the pattern of higher lows and higher highs, you'd have to take out 25, 55, 50, about 116 points lower.
When you take a look at moving averages, you have been over them. So this would act as support, which is now above that last break low. So even if you were to get a correction, a lot of analysts would say, look for the moving average the way they did back there and there for potential. That doesn't mean it has to hold, but for potential support. The resistance area, and we ran it for the longest period of time in weeks, has been the Bollinger Band, and the market is starting to slip back. Now, Bollinger Bands are an algorithm designed to keep the market trading within them 95% of the time, so I look at them as a natural resistance barrier, depending on what pattern preceded it. Because this market's been going up, it does a better job of holding back the gain, if you will. If you were coming from sideways action, in order to get a trend going, you've got to bust through the top or the bottom band and get them to widen out into a trend, which is exactly what happened here. In terms of momentum, it is still to the upside. So yeah, you're getting a correction, but momentum hasn't begun yet to turn down. On the NASDAQ, we've had a corrective week. And you can see where now you're starting to get the red line actually dropping away. It doesn't mean that it's turned down yet. It has to get under 80 to say that. If it does that, I would not be surprised that we get back to the 18-day average to regroup, and that's 61.97, 200 points from here. But would you think you'd be down 100 points almost today? But you were. When we take a look at the weekly bar chart on the Dow, the market, like the S&P, running the upper Bollinger Band, have not really turned down the momentum, have not done that at all. The momentum is still higher highs, higher lows. Could the market get a correction early on in the year? Of course it could. Support here, we haven't even hit this 18-week average since back here, May. That's quite a while back. In the Russell, the market has, unlike the other charts, notice how the red line's getting under the 80. So this market has lost its upside momentum. Momentum is starting to gather something to the downside. The pattern, well, you still got the higher lows, but you also have lower highs that are setting in. If we take a look at this high, it's 1557.30, and this high was 1561.90. So we have a pattern where you're narrowing in like this. Coming down on this line, up on that line. We'll see how it goes as we get into the first part of the year. And the VIX, just trading at this 18-day average. One of the biggest gainers for 2017 was being short at the beginning of the year of the VIX because volatility completely came out of the market and it went into a pattern that really traded, well, maybe as high as the low 20s, which is also considered low, but then it kept getting down to the 8 level, 8.5 level actually, and it kept finding support against that. It's now starting to go sideways. 10-year notes, what do you think interest rates are going to do? The Fed keeps saying they're going to raise rates. A lot of people think this particular note might get a 3 handle in front of it by the end of the year. If the Fed does 3 or 4 rate hikes, probably the case. But what if we slow down in the economy? Don't know. The pattern, lower highs, lower lows, got down just last week into an area where some support against the lower Bollinger Band was seen, but momentum still pointing down. Nothing pointing this chart up yet. In the dollar index, we have lower highs, lower lows, bearish. Momentum down, bearish. Bias down because you're under the 18-week average of closes, bearish. Potential support might be the lower Bollinger Band. What negates the pattern is taking out 94.21, and resistance is back at the 18-week average of 93.15. Eurocurrency, bullish. It's the flip-flop of the dollar. You've got higher lows, higher highs. You are right now into resistance of the upper Bollinger Band. I would not be surprised to get a back off of that. Momentum is still pointing up, but whenever you get to that top Bollinger Band, I pay close attention to it. What this market's trying to do is not continue the uptrend it had. It's going sideways now, and it's spinning in here, I think, for strength. Let's see what it can do with that. The commodity currencies might be an interesting play this year. So you've got the Aussie dollar, the Canadian dollar, even the New Zealand dollar. And you can see how this market's come alive recently, trying to come up. Momentum's up. It is not a trend. It's got a lower low and a higher high, but it's got the other parts going for it. In the Canadian dollar, you've got higher lows, higher highs. You're finishing the week off over the 18-week moving average of closes, and momentum is pointing higher. You know, $60 crude oil does an awful lot of good. Why didn't this market maybe go higher? NAFTA. Still got to think, what's the president going to do with NAFTA? And by many accounts, by March, a decision has to be made for Mexico at this point. Otherwise, it's probably going to expire due to the Mexican elections coming up. Doesn't mean it won't be resolved. Japanese yen rallied back to resistance at the 18-week moving average of closes. The pattern has been one of higher lows, higher high until this week. Now you can argue that we got lower highs and higher lows. So if I step back from here, it was pretty clear you had the higher lows, higher highs, but you were under the 18-week average. You got to it last week, and you still haven't poked through. You want to get a trend going to the upside, poke through that high now, 89.30s, and you probably get the pattern of higher lows continuing and higher highs, might get into the resistance of these numbers. Break through this low and you throw the market back into the downtrend. In the Brent versus the WTI crude, should be an interesting years. I watched a lot of analysts and they're split. I am of the opinion that you've had a confluence of events to set energy prices up, what, 30% or so from its lows this year. So I'm looking at OPEC. I'm looking at members within OPEC wanting to release more oil on the market. The 40s pipeline, which got hurt over the, since December 11th, hasn't produced that 450,000 barrels a day. That pipeline's coming back online literally as I'm speaking with you. Libya, the pipeline that got blown up this week, I've already read that you can never believe what you hear out in Libya. That's what I've learned. But they claim the repairs will be done quickly and it'll come back up. They still have the problem with the militants, so who knows where that is. The difference here of roughly $6.5, $7 has been attractive. You haven't gotten too far away from that between the Brent and the WTI. Momentum still pointing to the upside in the Brent. Next objective could be 68.34. Do you think you can get a 7 handle on it? That'll be the interesting part. WTI, 62.14 could be the next upside target. You've still got higher lows, higher highs, momentum's up. But if you should take out 56.82, it could be the beginning of the sign that the market's gotten itself high enough where it starts playing. One of the things I said on Fox, doesn't mean I'm right, is I think the next $5 move will be a bit easier to the downside than making it to the upside unless there's something geopolitical that occurs. In terms of nat gas, well, this cold weather certainly made the market come alive. You've just gone from 256.80 to 295.40, and there is a scramble on right now in nat gas because the companies that need it for the Midwest, the East Coast, the Northeast, what's going on there is it's so cold that they're scrambling for inventory. But once the weather breaks again, how does the rally hold? We still have the pattern of lower highs, lower lows, and what the market has done is it did turn the bias up because it closed over the 18-week average, and momentum's turned up. Is it going to be enough to get up here becomes the question, and that's very questionable. So if you like what I'm talking about here, you might want to take a good look at my charting course. Now, there's no point in calling us, and the reason is by the time you call, my sale will be over. It only is going to go through January 1st, come the 2nd. That will no longer be the case. You can go to our website, read about it. Go to there, and under the word education, a whole detail about what the course entails. It's 5 technical studies, 6 hours of videos, charting software. You see what I do in the charting software, yes, it'll have the data. You can go back and chart the way I did it. And then in the mornings, I bring you up every morning with a fresh video of what's going on right at that moment at 8:30 in the morning. Now you can go back, look at that video, see where to go. A new feature for the coming year, I'm going to have webinars. You can come in and ask questions as you have them. That'll be another feature. So how do you get all this? Well, you're going to type in the coupon area the word XMAS, no apostrophe. You don't need capital letters. Instead of $129.95, $79.95. Sale ends, end of business, January 1st. That's New Year's Day. You can click up here if you'd like. That'll take you to the page as well if you're watching me on YouTube. I want to take this moment out again to thank you for watching, wish you all a very happy and prosperous new year. I'll see you Tuesday.